Archie, thank you for joining us. We're at the One-to-One conference today. Tell us a little bit more about the PFS you've recently announced.
Thanks for having us, Scott. It's a great achievement. Earlier on this year, in February, we published our PEA, and within 9 months, we published our PFS. So the team at Cardinal, take my hat off to the entire team, and the study consultants, all Tier 1 operators. The PFS basically tells us that all things being said and done, we're looking at a CapEx, including contingency, of slightly over $400 million to build the project and get into production with a 300,000 ounce consistent life of mine production. An IRR after tax of 38% at the current gold price. We've stress tested it down to $1,000 gold and it still has a 2 in front of it. So it's a fantastic result. A lot more confidence in the project. It's robust and it looks like it's on its way to be built.
So what's the plan for the next 6 to 12 months?
Sure. The plan for the next 6 to 12 months, it's twofold. We've got the deposit, which is almost 5 million ounces, 4.75 million ounce reserve that's being worked on in the background, and that will have its own news flow. De-risking procedures and the like, and we're heading towards a DFS towards Q3 of next year. So we'll deliver a Q3, we're fully funded for that and beyond. On the other side of the coin, the company also has some district land package, which is being looked at. Recently we cottoned onto something that's about 1 kilometre long, shallow, high grade. The rain set in, now the rains are over. We're going back out there again and evaluating a target, but we have several targets throughout the land package. The objective is to try to find shallow, high-grade ounces that can be factored into the economics of this already fantastic Namdini deposit. And if we're lucky enough and those shallow, high-grade deposits turn into something of substance and they require their own plant, well, that's even better. That's a great problem to have. But we need to explore that land package very targeted, very precisely, and very careful with what we're doing out there, conserving our cash as best we can.
So obviously we're at the One-to-One conference today in London. What's the message to people at the moment?
The message is start looking back into the gold sector, not only for Cardinal, but the gold sector as a whole, because we've been in a lull for quite a while. As we all know, there have been other opportunities, other alternatives for investment, but it's like boom and bust kind of cycles, right? But gold always is a store of value, has been for thousands of years, and there will come a time where the serious money will start flowing back into the sector, starting with producers who are less riskier, and then they'll work their way down to unfunded developers like ourselves, and then down to greenfields explorers. So start looking at gold is all I've got to say in the new year.
And how's the One-to-One event been for you?
Oh, the one event, as usual, fantastic. This London event, our book is full, it's over full, and I'm having to meet people in the corridors and talk to them. The London market appetite is back for gold in general.
Well, Archie, thank you for your time today.
Thank you very much, thank you.